Welcome to my channel. In today's video, I'm going to be simplifying what it means to short a stock. So if you want to listen to this guy talk about that, stick around. So, shorting stock, what does that mean? Typical stock market investments are all about long-term profits. So you buy a share now in the hopes that it values and in the hopes that it gains value going forward. Short selling or shorting a stock, it's the opposite. So you buy a stock now, or you look at the stock and you expect its value to decrease, and with that you expect to make profit. How does that work? Let's go through an example. So we have our trader, typical stock market trader. Let's call him Joe. Joe is looking at a company, GameStop, and he believes that their share price is in decline. So he's betting that the share price will keep decreasing and he wants to make profit out of that. How does he do it? The first thing he does is to reach out to a broker. This broker currently owns GameStop shares. Joe wants to borrow some of those shares. Let's say 10. Each GameStop share is currently trading at $20. The broker accepts the deal and lends the shares to Joe. Joe immediately sells the shares. He makes $200. Part of Joe's contract with the broker involves him having to return the shares at a later date, let's say 3 days to a week. After a week, the share price has now declined to $10 a share. Joe buys the shares back and returns them to the broker. In this entire process, Joe has profited $100 because he initially sold all the shares that he borrowed for $200, and at the end he only had to spend $100 to return them back. Let's go to a different scenario now. Let's say a week passes and the share price, instead of decreasing, it increases to $50 a share. Joe now has to repurchase all those shares back and return them to the broker. He spends a total of $500. Joe's loss here equals $300 because he initially only earned $200 on the sale. He had to spend $500 now, so he actually had to put in $300 out of his own money to be able to buy all the shares back and return them to the broker. And that's it. This is what short selling is all about. You borrow shares from a broker, expecting the share price to go down. You immediately sell them and then repurchase them at a later date, hopefully at a lower price. And your profit is the difference between the price that you sold them now and the price that you bought them later. If you liked the video, leave a comment down below, subscribe to the channel, and I'll see you next time.